Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1543A, and today's date is April 12th, 2018, and the title of the episode is IMF reports that global trade is on the brink of imploding. Let's get into the economic collapse financial news. Now, the central banks, financial institutions, banks, they realize that the blockchain technology, that is going to be the future. And they're very worried about it. And this is why all those reports came out saying that, if cryptocurrency continues on its path, it's going to damage their business. Actually, it's going to put them out of business. That's what they're really afraid of. And this is why Jamie Dimon and other banksters came out and said that Bitcoin is a fraud, it's in a bubble, and they pretty much manipulated it. Now, if you remember, we talked about this with an interview with Jeff Nielsen and how they can throw tons of, pre-printed currency at the crypto market or use Mt. Gox to dump Bitcoin or anything else like that. First, they would buy it up, then they would dump it and make it look very volatile. We can see that they've been doing this and basically showing the world, see, it was in a bubble. It's very volatile. Don't use it. And Jamie Dimon, he came out and said Bitcoin is a fraud, even though we know the banks, their investment houses are investing in it. Even the central banks are investing in it. And we can see right now, JPMorgan Chase, they're in trouble. Now, remember, the banks, they decided that you cannot use the credit cards that they issue to purchase Bitcoin because they want to protect you from volatility. But you can use your credit card to gamble. That's fine. But you can't use it to purchase Bitcoin because they want to protect the public. Yeah, that's what the banks want to do. They want to protect the public. The central banks want to protect the people. No, that's not what it is. They're protecting themselves. And it looks like JPMorgan Chase has been busted for Bitcoin fraud. Now, there's been a lawsuit in Manhattan Federal Court accusing it of charging surprise fees when it stopped letting customers buy cryptocurrency with credit cards in late January and began treating the purchases as cash advances. Now, the lawsuit accuses JPMorgan Chase of violating the U.S. Truth in Lending Act, which requires credit card issuers to notify customers in writing of any significant change in charges or terms. Simply put, the bank switched from charging regular interest rates to charging higher cash advance rates on purchases of cryptocurrencies without notifying their customers. You see how they're protecting the public? So the named plaintiff in the lawsuit, Idaho resident Brady Tucker, was hit with $143 in fees and $20 in surprise interest charges by Chase for 5 cryptocurrency transactions between January 27th and February 2nd. With no advance warning, Chase stuck the plaintiff with the bill after the fact of his transactions and insisted that he pay it. Hundreds or possibly thousands of other Chase customers were hit with the charges, and they're all starting to file lawsuits. Once again, they are protecting the people. No, what they're doing is they are basically ripping people off, and they're trying to force people out of the crypto market. And this is why you need to learn about the crypto market. Now, a lot of people have been writing in and asking me about, the crypto school, the trading room. If you go to X22reportschool.com, or if you see it on the website, there's a little banner on the right-hand side that says crypto school or trading room. It'll bring you right over to that. You can learn about cryptocurrencies. You can also go into the trading room, and it looks like there's a lot of people that have been joining, and I've been in the trading room, and they're doing very, very well. You have Crypto Cowboy and Crypto Z. They're very good at what they do, and basically, you follow along in what they're doing. You watch their trades, and you learn how to trade in the crypto market. And a lot of individuals that come in with hardly any type of cryptocurrency, well, they're starting to make more cryptocurrency, and this will eventually get larger and larger as time goes on, and you'll learn how to read the market, how to trade, and things like that. I am also in the trading room, not as much as I should be, but this weekend I will be in it a lot more. So if you want to go over there, just go over to X22reportschool.com. Now, it looks like the RBC has a warning out saying that they're starting to see cracks in Canadian credit. More specifically, what they're seeing is consumer credit. It is becoming a problem yet again, and it's happening in Canada. And why this is all happening? Because of low interest rates and the cheap and easy access to capital. Well, basically has gone from a solution now to a problem. And lenders are seeing delinquency rates roll out in time and duration. Now, we know that interest rates are moving up. We know that real estate is cooling in Canada. We're seeing a huge drop in prices and sales and everything else. And there is growing speculation that the debt burden poses a threat to the financial system, even as Canadian housing prices remain one of the world's true bubbles, and they're still up there. We see everything starting to break down, and it doesn't look good. Now, RBC adds roll rates in National Bank of Canada's Canadian Credit Card Trust Program are at the highest since 2008. And they're seeing early stages of delinquencies. 60 to 89-day delinquencies and roll rates are above the 10-year average. They're starting to see a huge amount of problems. Now, here in the United States, we discussed the subprime problems, where we saw small subprime lenders declare bankruptcy, and it's getting worse. Now, one of the collapsed small lenders was Summit Financial Corp, and when it filed for bankruptcy on March 23rd, it disclosed that it owed Bank of America $77 million. Now, this loan was secured by the auto loan Summit had extended to subprime customers, who are now defaulting in large numbers. Now, in the bankruptcy documents, Bank of America alleged that Summit had repossessed many of these cars without writing down the bad loans, thus underreporting the losses and misrepresenting the value of the collateral. This allowed Summit to borrow more from Bank of America to fund more subprime loans. Summit is just a very tiny lender, right, compared to all the others. Can you imagine if this was happening in other subprime lenders, which most likely it is? Doesn't this remind you of something? Oh yeah, the subprime securities, where the rating agencies said they were AAA, and actually what was being hidden from the public was that all the loans inside of these subprime securities, they were defaulting. Well, it looks like the same thing is happening once again. So what is the exposure to all of this? Well, it's very difficult to say, but what we're seeing right now is that it's not just auto loans, but subprime mortgages and subprime consumer loans. And what we're seeing right now is that there are a huge amount of problems. Now, if we look at the non-banks lenders, they have surged sixfold since the financial crisis to nearly $345 billion at the end of 2017. Here are the top contenders. Wells Fargo, $81 billion. Citigroup, $30 billion. Bank of America, $30 billion. JPMorgan Chase, $28 billion. Goldman Sachs, $22 billion. Morgan Stanley, $16 billion. We still don't fully understand the magnitude of it. Even the banks might not. Bank of America is finding out in the Summit bankruptcy what has been going on here. And this is going to trickle down to all the other banks. And when all is said and done, we're going to find out that a lot of things have been happening behind the scenes, just like in the subprime securities, and we're already starting to see this. We're seeing the mortgage refis. They have tumbled to the lowest since the financial crisis, and things are not improving right now. We see that coming from the Mortgage Banker Association data, mortgage demand continues to slide, and last week mortgage application volumes slumped another 1.9%. And even though the rates dipped a little bit, it still looks like applications are declining. And initial purchase applications have dropped by 2%. This whole thing is starting to fall apart. And when you look at the Mortgage Bankers Association and you look at their graph, it has been on a downward trend since 2013. And it looks like it's getting worse and worse as time goes on. Now, the Mortgage Bankers Association expects nothing short of a bloodbath. It forecasts overall mortgage purchase volume to grow about 5% in 2018, but refinancing volume to drop by 27%. And I think it's going to be a lot worse than this. When we look at Wells Fargo, we can see that residential mortgage applications, they have been declining over time since 2013. And it looks like the situation is just getting worse and worse. And as interest rates move up, the whole thing is just going to get a lot worse as time goes on. We're also seeing that there are trend cycles that are turning right now. First, the central bank distortion manipulation of markets. We're starting to see that the markets, well, they're bobbing up and down, and we see the distortion is completely falling apart. The business cycle of credit, debt expansion, and contraction. This is also turning. The yield interest rate cycle. Well, we see interest rates moving up now. The commodity cycle. The stock market cycle. Regulations and globalization. All of these are starting to turn right now. And basically what is happening here is this entire system is ripping itself apart. The economy, all the indicators that we've been looking at, are getting worse and worse as time goes on. And what's very interesting is that the IMF is out there, Christine Lagarde, and she's saying that global trading system is in danger of being torn apart. Now, this is their globalist model that they've been working on for many, many years. And she's saying because of protectionism, because of what Trump is doing, making bilateral trades, not going down the globalist route, she is saying that global trade, well, it looks like it's going to implode. And she's saying that the economy was doing well. Global growth projection might be around 4%, and it looks like things are getting better. Countries are paying off their loans. Everyone is happy, and we know this is all a lie. And now she's saying that because of Trump's policies, well, the global trading system that we've known for a very long time, of course, they wanted TPP, they had NAFTA, they were pushing the TTIP, and all of that did not go anywhere. We see the Belt and Road is making huge gains, and there are more and more countries joining that. Well, they're saying that there's going to be many, many problems. Actually, she said, with growing protectionism, we could quickly reverse out all of what we've been seeing, where we've been seeing growth, we've been seeing the economy getting better, we've been seeing good times ahead. And she's saying that the current global picture is bright right now, but we can see dark clouds looming. And basically what she's saying is that they're very worried about their system being destroyed, taken away. That's their biggest worry. The central bank's biggest worry is the world realizing they will do better off, the economy will flourish without the central bankers than with the central bankers. Look at Iceland, for instance. They've gotten rid of a lot of the bankers. They threw them into jail. They took control of their economy. Same thing with Russia. They took control of the private Western Central Bank, and their economies are doing very well. Those countries that listen to the central bank, they have a huge amount of debt, they have a huge amount of austerity, and they're not doing well. The central banker's biggest worry is that if there's a country that is not working with a private Western Central Bank, and they do very well, they're afraid the rest of the world is going to see this and say, why do we need the central banks? That's why all those countries that don't have a private Western Central Bank, that's why sanctions are placed on them. That's why they're the enemies. That's why they keep this up. Now, the central bankers, they make sure that they don't destroy a country. They keep them in limbo. They make sure they have a lot of credit. They make sure there's austerity, but they'll never allow the country to go down, because then the rest of the world will look at it and say, whoa, under the central banking rule, they destroyed this country. They will not let that happen. They will always make sure that they strike some type of deal where the country never folds. And they want to make sure that you never see those countries without a central bank. This is why, like I said, they put sanctions on them. This is why they're the enemy. But if you look at Russia, even though they place sanctions on certain individuals, the country is doing very well. They have a very little bit of debt. They've taken control of the private Western Central Bank. They have a lot of gold. They're continually purchasing gold. And we could see at this point that as we move forward, a lot of the globalist infrastructure that they put into place, well, it's going to start to rip itself apart. And we're already starting to see this. The central banks are already out there letting everyone know that if Trump continues in this way, that this is going to destroy their system. Remember, it's their system that they created to benefit them. This is not a system for the people. So we're headed towards a transition. It's coming very, very quickly. The banks are worried about cryptocurrency. They're worried about that this is going to put them out of business because, again, if you're using cryptocurrency, the blockchain, there's really no reason for the banking system because you can do things in all different ways. Actually, I was just reading an article about a new cryptocurrency that will allow you to purchase real estate and not go through the banks whatsoever. Everything's done on the blockchain, and there's no need for the banking system. And I think as time goes on, we're going to see a lot more of this. And this is why the banksters came out with their report saying that, cryptocurrency is a threat to their business. We're going to go through this transition, and it's going to take a certain period of time. It's going to hurt, just like when we went from the gold standard off to the petrodollar. Again, we were still the reserve currency at that time, but we went through some pain. Now we're not going to be the reserve currency anymore, so it's going to be a lot more pain because we have a lot more debt, we have a lot more derivatives, we have a lot more of everything that we probably didn't even exist back then. And this is going to be where the pain is going to be, and this is why you need to be ready and prepared. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.